Hello and good afternoon, everyone. It's Friday, May 2nd, 2014, 1:39 p.m. here in Webster, New York. This will be a video lesson called Don't Drink the Kool-Aid. All right, don't drink the Kool-Aid. All right, what you're looking at is Grow Life, PHOT. This is a stock on the over-the-counter bulletin board, so the OTCBB, and it's a marijuana play. All right, more of a pick and shovel type play versus supplying medicinal marijuana or recreational marijuana. I thought it was best in breed. This is one I've been playing all year long, back and through here. Started to write about it and trade it. Very good to me. I don't know what the exact number is, but made somewhere between $20,000 and $30,000 this year, swing trading it on and off. You can check the trade performance page on the website to confirm the exact numbers if you want to see. But I lost $42,000 in this mess right here. I'm going to talk about how I drank the Kool-Aid, how I got too complacent, too comfortable with this trade, how I could have avoided what happened by just following some basic rules, and how Wall Street, no matter how well you think you know it, can always just sneak up and bite you in the bottom. So hopefully you didn't get stuck in this trade and lose money. If you did, I'm right there with you. Either way, there's some points that I'm going to cover here that I think are good to have archived on the website. All right, I won't talk about all of the trades I made on this stock, but like I said, about $20,000, $30,000 in profits prior to this situation right here. So what had happened is I became very comfortable with this company. I really thought it was best in breed. I wrote about it positively, and I never saw an SEC halt coming, obviously. Just made no sense to me the morning I woke up and saw that. I was actually on the mic in the chat room when it got halted. And for a small second, I had hoped that some good news was coming. And then I saw the filing and I knew it was going to be at least a 50% loss, if not more. But leading up to that, I got so comfortable with this stock that I started buying $30,000, $50,000 worth of stock on my swings, and I would go for a 10, 20% win and make, $5,000 to $10,000. I don't know if I lost on this all the way in through here. I probably traded it 5 to 10 times. So this purchase right in through here on the hammer, all right, when it came off the lows, I bought it right here. So I saw the technical support, I saw the range to resistance, and I thought, if this bounces, there's a really good trade from here to here. This is kind of what I've envisioned. So I jumped in here on this yellow candlestick, and the next day I was up 10% in through here. Now, I initially alerted 70,000 shares at 50 cents, so I had $35,000 in the stock. At the time, that was probably about 13% of the portfolio or something like that. So $35,000 worth of stock, up 10%, I'm clearly up 3,500 overnight. Why am I not taking profit? I teach 5 to 10% rinse and repeat. I looked at it, I thought about taking profit, and I just didn't. All right, so that's hindsight, right? But one thing that we can learn, the first mistake is going too big on an OTCBB. All right, this isn't a NASDAQ, this isn't an Amex, this isn't a New York Stock Exchange. OTCBB, going too big on an OTCBB. Mistake number one. Mistake number two, not taking my 5 to 10%. Had I done that, I would have avoided the halt the following day. You don't see the candle here because the SEC halted the trading on the stock. You can go read the news as to why. As of right now, it hasn't been determined that anything was wrong. In fact, based on what the CEO said, there is no open investigation on the company anymore. So it looks like there wasn't anything rotten in Denmark. It sounds like there may have been some manipulative trading going on in the background that had nothing to do with the company. This isn't determined yet. This is just speculation from what I've read in the statements from the CEO and the SEC. It sounds like there was something fishy possibly going on that had nothing to do with the company. That's neither here nor there. All right. When you're trading a hyped up sector, when you're trading an OTCBB, you have to be careful. And the way you do that is only allocate a small portion of your portfolio to risky trades like this. But because I thought it was best in breed, because I fell in love with the stock, i.e., drank the Kool-Aid, I started to trade much bigger positions. So I don't take my 10%. I don't even take 5%. I let it come all the way back down to my 50-cent entry, and I buy another 30,000 shares on this day right here, the pink candle. So now I have 100,000 shares at 50 cents. The following day, I'm on the microphone and chat, and it stops trading. Immediately, I think, oh goodness, something good is going to happen because I'm thinking this is best in breed, buy out, whatever. Well, as it turns out, it was a halt for the reasons I mentioned earlier. Again, you can read the specifics and the details in the news release on Yahoo Finance. But the bottom line is the SEC halted it because they had some concerns. Whenever that happens, whether or not they find anything bad or not, it's opening significantly lower, at least 50%. In this case, 60, 70%. In this time, the 10 days that it was halted, I formulated a game plan. I said, I'm going to buy some shares, probably not the first day, and I'm going to sit on this and play the bounce and trade out of it. So, mistake number one, complacent, drinking the Kool-Aid. Mistake number two, not taking my 5 to 10%. Mistake number three, going too big on a position. First of all, $35,000 was too big. Second of all, adding another $15,000 for a $50,000 position, 17% of the portfolio at the time, way too big. Mind you, at this point in time in the year, I'm up $120,000 on a 180,000 starting balance. I'm up big at this point in time. So I could just put it on cruise control for the rest of the year and I'm going to have one of the best years I've ever had. Anyways, we understand what happened next. It opened significantly lower. Now, it would have been wise to grab something down in through here, but I didn't because I didn't want to trade the open on the first day. Well, that was a mistake. In hindsight, it bounced almost to 30 cents. That said, later on in the day, it retraced some, and I picked up 50,000 shares at 20 cents. So now I'm into this one for $60,000. The next day, it looks like things are going to go well, but then it retraces. I grab another 50,000 shares, my last purchase, at 14 cents. So now I've got between $60,000 and $70,000 into this gray sheet. All right, it's not trading with a level 2 anymore. All right, all you can see is time and sales, so you can't see market depth, and it gets very difficult to know what's going on. So I grab 14. I'm averaged at 37 at this point in time, and I say I'm going to sit on these shares. I've got 200,000 shares at 37. I'm going to sit on them for the bounce. Will it drift lower from 14 to 12? Each penny was $2,000. I go from 38 to down 42, and I say I've had enough. I can't handle it anymore, and I capitulate. Well, by not sticking to my game plan of just riding it out, that right now, as of today's quote, just 3 days later, is a difference of $12,000, the cost of my first car. In fact, it's a difference of $14,000 right now, and that uptick to 20. So by not sticking to my game plan, I then hurt myself even more by being emotional and looking at the trade throughout the day. Absolutely frustrating, absolutely emotional trading, and absolutely the wrong way to trade. So countless mistakes here. All right, countless mistakes. I end up selling for a $42,000 loss. Today, that's negative $28,000. That's a big difference. All right, a huge difference. Like I said, the cost of my first brand new car. So end of story. Let me recap. I drank the Kool-Aid. I got too comfortable with a hyped up stock in a very speculative sector, and it's not even on a national exchange. That's problem number one. Problem number two, going with too big of a position. Problem number three, not taking profit. Problem number four, not sticking to my game plan. Problem number five, see problems 1 through 4. Okay, so frustrating, it's unbelievable. So that is what I hope to be one of the worst trades that I'll ever be in. I know how to avoid it in the future. If you see me make any of the mistakes in the future, feel free to smack me. All right, feel free to smack me. This is part of trading. I never, ever in my mind thought that this stock was going to get halted, but it's a good example of how complacency on Wall Street with trading can bust you up and bust you up fast. So don't get complacent. Don't drink the Kool-Aid playing speculative stocks. Keep the percentage of your portfolio low in case something like this happens. Yeah, they deliver juicy returns at times, but the 20 to 30,000 I made on it, I lost all of it and then some in that move right there. And lastly, try not to be emotional. Try and stick to your game plan even when the seas are really rough. And they say it and you read it probably, it's cliche, but the measure of a good captain, all right, is not how well they sail the boat in calm seas, but how well they sail the boat in rough seas. Stuff like this happens on Wall Street. There are times where selling and moving on is the right decision. There are times where gutting it out and sticking to your guns is the right decision. And the only reason I say sticking to your guns in this situation, the SEC didn't find anything. The company disclosed that the SEC didn't find anything and there's no open investigation. Do you understand what I'm saying? This is at least what's been published so far. So, yeah, it looked bad, but sometimes what looks bad ends up good and vice versa. You have to sometimes just struggle through that pain. I didn't, and I've paid the price. So many mistakes that you can learn from. Keep this lesson in your back pocket, especially for over-the-counter bulletin boards. That's OTCBB stocks, okay? Please, trust me. This is painful for me. This is embarrassing for me. I'm ashamed of myself. I'm frustrated with myself. And that's not going to go away anytime soon. But that's part of life. And you're only a fool, or I should say, I'm only a fool if I don't learn from it. I have learned from it. I won't make the mistake again. And therefore, I'm a better person and a better trader for that. All right, guys and gals, that's the don't drink the Kool-Aid video lesson. That's the OTCBB lesson. That's the don't be complacent lesson. That's the make sure you understand what percentage of your portfolio is in speculative stocks lesson. That's the take your profit lesson. That's the stick to your game plan lesson. All wrapped into one. Take it easy.